Welcome to another episode of The Brand Called You, a podcast and podcast show that brings you leadership lessons, knowledge, experience, and wisdom from thousands of successful individuals from around the world. I'm your host, Ashutosh Garg, and today I'm delighted to welcome a very senior and accomplished professional from San Francisco, USA, Mr. Nikhil Choudhary. Nikhil, welcome to the show.
Thank you, Ashutosh.
Nikhil is the founder and general partner of Nirman Ventures. He has founded several award-winning companies in the United States. He's been recognized, felicitated, and awarded several times, including the Inc. 500 and Indian Achiever Award. He's also got the Entrepreneur of the Year Award. So, Nikhil, before we started recording, you were telling me you've been in the US for 20 years. Tell me a little bit about your journey in brief.
Sure. I had a very interesting journey. I had no plans of coming to the US actually, and I was pretty content with my surroundings in India, but I always wanted to pursue higher studies, higher education, and I got an opportunity where I could go in and also research. I graduated with a civil engineering bachelor's.
Mm-hmm.
And I took on that opportunity and came to the US through that. But my philosophy of life was pretty straightforward. I was a startup guy. I was very driven. I was very ambitious, and I wanted to keep working. I faced this insomnia issue growing up as a child,
Mm-hmm.
and my parents took me to a lot of doctors. And a bunch of them told them that, give him this pill, give him that pill. One of them advised me, pretty effectively, and I took it to my heart. He said, child, you're blessed that you cannot sleep much. And how you utilize the hours that you're awake, will make a dent in your future, right?
Wow.
So I kind of took that on, and I never from that day on I was never worried like, why am I not able to sleep? I was always trying to be productive. So same approach I took with my when I was in my master's. I used to work in the lab. I used to study. My grades were amazing. I always made sure that I'm keeping my grades on, but at the same time I used to work in the industry. So I got a lot of grassroots experience, and I worked in Midwest in the United States, Michigan, Ohio, for three and a half years. From there on, I moved to New York, New Jersey area, and I worked there for a startup. It was a renewable energy startup, and those days, it was just a new push into renewables. It was very new. And I got an opportunity to, become an integral part of a startup. And I spent some time there, grew that startup pretty massively, the whole team. And from there, I moved to California some odd 12 years ago.
Okay.
And joined a large corporation, worked there as a senior executive, got an opportunity to start my own company while I was working there. And I took that on, and I got my first contract from that large corporation, actually.
Okay.
So that kind of catapulted me into forming my own entity and also getting a contract before I actually incorporated.
Amazing. So let's talk about Nirman Ventures.
Sure.
Nirman in Hindi, for our viewers, a lot of our viewers listen, also means construction and building. Yes. But tell me a little bit about this venture.
Yeah, so Nirman Ventures, it's a venture fund. Let me actually, it ties in with my background a little bit. So I've been a construction professional all my life. So I have about 2 decades of experience working in the construction industry, from various roles of design to actually constructing things and supervising on the site and project managing. So me and my partners at Nirman Ventures, when we all came together, and we've known each other for several years, either, we co-invested together in companies, or, some of them were my mentors when I started my business. And we kind of, during our own careers, we were looking for technology solutions in the industry, and we couldn't find many. This whole construction technology ecosystem is a fairly new ecosystem. It was coined about 7-8 years ago. And recently, we've seen a lot more push happening in this ecosystem because people have realized that construction in general is close to $7-8 trillion annual industry.
Correct.
And by 2030, it's going to become a $14 trillion industry. So in 7 years, it's going to double up. And the inefficiencies, if I must put it, they would count to about $2 trillion in 2030 if nothing is done there.
Amazing.
So with this mindset, we kind of, started ideating on a fund that is driven by industry professionals, because we looked at various funds out there in the market. And although those funds were great, and they had people who were spearheading the fund, they were from finance ecosystem, and they spent a lot of time in venture capital. One thing that severely lacked is the understanding of the domain. So we thought that there is not many or none funds out there who are operated by people who have actually built companies in this ecosystem,
right,
and understand the underlying problems and understand the complexity. So that's what we do at Nirman Ventures, and we have recently launched fund, and our focus is construction tech and clean tech. So with clean tech has to have some sort of overlap with the built environment. Let's say, the concrete, the cement production in industry, the cement production contributes to, I believe, the largest carbon emission in any manufacturing process in the world. So how do we go about that, right? How can we carbon capture at the origination, right? Or how can we carbon capture by using better mix designs on construction sites, right? So that's kind of the focus area of our fund, and we are early stage focused fund.
Very interesting. So, since you're focused on construction tech, clean tech, and property tech, question I have is the sector more important or the technology more important?
That's a very good question, actually. I would say, so my theory on that is both are equally important, right? So like I explained to you, construction as an industry in general, you have to look at the sector map also, how big is the industry, right? And then how outdated is the industry, right? There are still companies out there, quite a lot, if you, I don't know the percentage exactly, but it's going to be in 2 digits, that use fax machines.
Correct.
In the day and age of internet and emails and everything, there are still purchase orders that are handwritten and they are faxed to vendors. So industry is very important. At the same time, you have to look at the technology that is out there in that industry, right? So when we mapped the whole sector, we figured that there's not enough technology innovations that's happening in the sector. So our fund can really be the catalyst to drive those innovations, right? So we are not the founders, but we can support the right founders who are trying to make a dent in this ecosystem because of our deep understanding of the industry.
Well said. And Nikhil, when it comes to construction in the US, how is technology changing the entire industry? I mean, every industry is being impacted by all these new things that are coming, from artificial intelligence to using robots and so many other things.
Right.
Is the construction business, and as you said very rightly, it's still pretty old in terms of technology.
Right.
Is it changing in the US?
It is actually, believe it or not, about 3 years ago, most of the innovation that was happening in the construction industry was from within the industry. So people who were part of the industry, project engineers, project managers, they had witnessed the problems themselves, and they kind of launched their own startups. What's happening in the last 2-3 years is a lot of players from outside the industry. So deep tech, aerospace, robotics. These people are looking at construction because they see it as this huge market. And they see that this is a great market opportunity. So now this talent from other industries is entering our industry, right, in terms of technology innovation. And this is kind of the cusp of the innovation when it really happens. Because when outsiders start looking at the industry, because they come up with solutions, they come up with out-of-the-box solutions. Right. And in terms of technology, we're seeing like amazing technology that's coming in our ecosystem. Right? Robotics, you named it all: robotics, artificial intelligence, augmented reality, virtual reality. ML is playing a huge role, right? I was talking about concrete mix designs. There are a lot of machine learning, AI-driven solutions that are making the mix design process efficient, right? There are robots that are now, they don't need to be manually operated. They can walk the construction sites. They can detect, like, is there a safety issue? Is the work progressing as per the Gantt chart? Is the work progressing as per the plan? A lot of different applications, even contract management, right? Even contract management.
Yeah. I don't understand the business at all, but from whatever little I have seen, I thought the ultimate was 3D printing of houses, but obviously there's much more beginning to happen now.
Yes, and 3D printing is also, it's playing a good role, but the technology still needs to mature. But there are a lot of different players that are coming out in the market with real cutting edge solutions in 3D printed homes.
Fantastic. Also. So Nikhil, let's move on and talk a little bit about your own investing philosophies.
Yeah.
What are some of the key metrics you look for before you consider an investment?
It's a great question. As you know, it has changed in my career. From I was an angel investor for almost 8 years before I launched my fund. And my focus when I was an angel investor was more pharma tech, biotech, medtech.
Okay.
Because of course, being an industry guy, I wanted to hedge. I wanted to diversify. Then I came to the realization that my superpowers are within my industry, and that was the genesis of Nirman Ventures. But when I was an angel investor, I was a one-man army, right? So how much due diligence can I conduct as myself? So I had a few factors that I used to go by, the founding team, which played a very important role. There are a lot of people who would invest in solo founders, but I used to kind of stay away from solo founders. I used to look at the founding team because it's also acts as a support system. In my businesses, I've always operated in a partnership. There are good days, bad days in a partnership, but as long as you're good people, it always works out. This is my theory of it. But there are more positives out of a partnership than negatives.
Well said.
You always, you go through ups and downs, and you see, you have someone to, talk to when you're going through tough times, right? You have this support net.
Correct.
So founding team is one of them. The second thing is we look at the product's maturity, right? Is it still an ideation stage? Or has it matured into an actual product?
Correct.
As a customer base?
Yeah.
So those are the 2 key points that I would look at when I was angel investing. Now as a fund, we have a lengthy list of things that we look at. A lot of criterias that we go through before we decide.
Interesting. And when you talk about investing in some of these places in funds, based on a lot of the people you would have invested in, or people whose plans you would have reviewed, what, in your opinion, are some of the basic mistakes a lot of startup entrepreneurs make?
I think quite a few. The list is not the list is lengthy, but to name a few, I think not anticipating the time to raise. People think that they have a product or they have a startup idea.
Correct.
And they go out and they will get funding right away. Right? It doesn't work that way. It's a lengthy process. 6 months is the minimum time that it takes. So coming to reality with that, that's number one. Number two is how receptible you are, right? Because startup is a team sport. It's not an individual sport, right? Like I say, so everybody plays a part, right? VCs are also important. Your co-founders are important, right? So if it's singularly directed startup, it becomes a problem, right? Something that we've seen happen again. And then cash burn is always, an issue. Burning too much, you've raised. These days, it's a market trend. When startups raise capital, it's like a big celebration and announcement. But what they don't understand is actually it's a debt. It's even though it's not a venture debt, it might be a equity round, but then you've given out a piece to someone of your startup, and there is an expectation. So it's only the start. Raising money should not be the end goal. So we see a lot of founders get trapped into that, right? Your product is your end goal. Your customers are your end goal.
Correct. Funding is not. Absolutely. I agree with you. The next question that I have for you is that it's often been discussed how involved should an investor get in managing the company and in governing the company?
It's a very interesting question. You're asking, Ashutosh, I must give it to you. You've done a thorough research.
No, I've been through private equity myself, and I've had some good experience, some lousy experiences.
So a lot of people, a lot of VCs are very involved in their startups. And I like this approach that one of my friends, he's also a very renowned author in venture capital. And he told me that, hands off and nose in. So we kind of like that approach, right? Like we are not an incubator. We are not a startup venture studio. We don't want to retain maximum equity of the startup. We want, because that's not how innovations work. We want the founders and the startup team to innovate. But if we would definitely like to guide them, especially us being operators and business leaders in our industry. We'd like them to come to us if they are facing any challenges, because if we have invented or gone through a process of problem and figured out a solution, why do they have to go through the same process again?
Correct.
So it's, the question is not, the answer is not very straightforward. Some people might have an approach where they are very involved. But us as a venture fund, we like to kind of come in, be an advisory support system.
Very interesting. So one more question relating to investing, and then I'll move on. Sure. At what stage do you look for an exit?
Yeah, when the exit comes through. But so we are an early stage fund. We like to go in at right after pre-seed. Our sweet spot is between pre-seed and a seed, when again, a startup founders, they either need our support beyond capital. Capital we'll deploy, but at the same time we want to be we want to stick to our motive, which is there is a lot of capital out there, so we don't write very large checks. But what we bring in is our combined team's years of experience in the industry, right?
Correct.
So those are the things that
Very interesting. There's another perspective that a lot of people have asked me, and I've asked many people who are from your business. Who knows how to price a company better, the stock market or the venture capital firm?
I think none. Consumers. Yeah, I think it's the consumers, right? We are seeing this trend, of hyper valuations. Now is the perfect timing of that. When we see stocks of companies just get slashed into half. I was just talking to a friend of mine yesterday, and it's a great company, actually. Their valuation was good valuation, and it's a late stage venture back company. But again, their valuation got slashed in half because there were other startups out there whose valuations were hyper pumped, right, by the market, actually. So I think the right way to assess is, what's the consumer base? Where is the consumer base going to go in the next 10 years? What's the traction? What's the velocity? And then kind of pricing out the valuation. That makes more sense.
I have time for two more questions. My next question is, a conversation I was having with some big construction people in India and in Singapore, where they have real assets. And they were saying our biggest dilemma is that we build the assets, we make the profits, but some tech companies in the same sector get the valuations and they lose all the money. What is your perspective?
So say that question again.
So big builders say that we create the assets, we make the profits. And then along comes a tech company in the construction business and they get the high valuations.
Yeah. It's I think grass is greener on the other side.
I agree.
That's what I'm going to say to them. Building a tech business is also not easy. Being venture backed is also not easy. People think that you get millions of dollars, but actually, if you're in those startup founders' shoes, for a lot of initial years, they're not making money that they can make
Correct.
going out in the market and working a job.
Correct.
They're actually making a fraction of that. So it's a lot of sacrifices and compromises that they do. And if you look at the startup success rate, it's really low actually. How many unicorns are made out of 100 startups? If you look at those stats, it's not even 1%.
Yeah.
So it's a lot of risk involved in that process. And then when the few do get those kind of valuations, again, we're in a capitalist society, and that's how the world functions. If something is good, and that's what innovation also gets a push. Right? And in conventional, I understand that dilemma that we are actually building the real product and real buildings, and we don't get those kind of our valuation is always EBITDA, right, times 1, 2, right? But I think that's been the trend, that's been the norm, and I think there's no remorse on that.
No, absolutely. I agree with you. And my last question, Nikhil, and this is for the many, many people who will listen to our conversation. As someone who has had such an amazing journey, in the corporate world and as a private equity fund, what would you say are 3 lessons you would want our viewers and listeners to take away? And a very large number of viewers and listeners are startup founders.
So the first lesson, this is what I told myself when I was starting out my business. If you make $1, right, spend $50, 50 cents in your growth, 25 cents, in your day-to-day operations or whatever, or you can do the math, but save the 25 cents, save a quarter for the rainy day, right?
Very interesting.
It's don't burn the cash that you don't have today. That's something that we've always done, running our conventional businesses ourselves, and because you never know when the market could turn on you.
Correct.
That's one important lesson that I would like to convey. The second one is be humble. There are lots of ups and downs, and I've had my own humbling experiences. I was a founder myself more than a decade ago, and success gets to you.
Correct.
Success gets to you, but there are always more successful than you in the world, right? There's always someone above you. So I think just be humble in the process, be complacent. Don't get hyper pumped when you are successful, because there would be rough days too as a startup founder. Right, and those humbling days would actually be when you're more humble, you'll actually meet more people, and your body posture will be different, and a lot of value will come out of those being humble, right? And the third thing is spend time equally with your loved ones, and as much as business is important, I think we don't value time as much as we should.
Very true. Very true.
I meet a lot of founders who crash and burn, right? And I can see the frustration. I can sense it, when we're hearing them pitch, and when we're talking to them, they've been running it for long enough, and their relationships are not good. They have children or they have spouses, and I think it's equally important to spend time, have a good sound mental health. You don't want to chase something and lose the other side of your life.
Well said. Great response. And on that note, Nikhil, and your 3 amazing lessons, make $1, save a quarter. I think that's such a powerful comment. Don't burn cash. Second, we said be humble, because remember, there will always be someone who's more successful than you are. And the third one, which is so important, spend time with your loved ones. Thank you so much for speaking to me about your own journey, about Nirman Ventures. I loved your comment of your philosophy, which is hands off, nose in. That's the first time I've heard this, but this is definitely a very quotable quote, that, hands off, nose in. Thank you for speaking to me about construction, about technology, and about angel investing. Thank you again for speaking to me, and good luck.
Thank you, Ashutosh. It was a pleasure. Thank you.
Thank you for listening to the brand called You Videocast and Podcast, a platform that brings you knowledge, experience, and wisdom
of hundreds of successful individuals from around the world. Do visit our website www.tbcy.in to watch and listen to the stories of many more individuals. You can also follow us on YouTube, Facebook, Instagram, and Twitter. Just search for the brand called You.